So I wasn't going to make a video on Palantir, but I decided that the information here is just too rich. It's too important not to share. The stock had a really good earnings report, really good, and as a result is down 22% from pre-earnings, which is just utterly ridiculous to me. They missed on EPS. Their earnings per share was 2 cents versus estimate to 4 cents, and because of this, nothing else mattered. Wall Street can't see but 5 feet in front of itself. They have no long-term vision, so the stock is selling off. If we look under the hood, this really was a great report. There's just so much important information here that is so positive. Palantir is reinvesting heavily into its business right now. Is exactly what Amazon did for so long, and why so many felt that they would never be profitable. And while they do this, they're simultaneously retaining all this top-tier talent because of all the stock-based compensation that they're paying out. But Palantir could flip the switch to profitability whenever they please. The CEO, Alex Karp, said on the earnings release that profitability on a GAAP basis is within eyesight. We'll get to all that and more in detail later, as well as some similarities to Amazon that Palantir does have. So let's take a quick look at the report, and then I want to focus directly on the words from the CEO, Alex Karp, during the earnings call, because he gave some real golden nuggets of information. So the numbers for this company are just insane. Total revenue growth 34%, and US commercial revenue grew 132%, and perhaps even more importantly than their very impressive growth rates. If you look down here where it says total net dollar retention of 131%, this means that if the net dollar retention is over 100%, Palantir can grow without even growing its customer base. This means that they're retaining all of the revenue from their current customers, and they're even spending more money. Anything over 100% net dollar retention means current customers are spending more. And this is possible because if we look at this slide here, their US commercial cohort growth, each cohort think about as a new suite of products. You can see the difference from 2018, when most of their revenue came from, products that were built in 2017 or earlier, whereas over time, that amount of revenue has actually made up a much less chunk of the bigger pie, and revenue is coming from these newer cohorts. So if we look at 2021, they made $100 million from products that developed in 2019 and $53 million from products they've developed in 2021. So this is a company that's just continuing to innovate, and the fact that customers are not only coming back, they're coming back to spend more money on these newer products. We see a similar picture painted on their US government cohort growth. Same thing happens here, where their older products are actually growing, but the newer products are growing at a very fast rate as well. This just shows you the company is constantly innovating. I mean, if the majority of their revenue was still coming from a product that was from 2017 or earlier, this wouldn't paint as strong of a picture. But look at that revenue growth from the newer segments. Now keep in mind that this incredible growth rate, 41% revenue growth for 2021 as a whole, and US commercial revenue up 102% year over year, is coming with a very minuscule sales force. The sales force historically has not been that large. Alex Karp has even done most of the selling himself, but Palantir is now investing aggressively in a sales force. They said on the call that they are planning to hire 200 salespeople. So what do you think is going to happen when their clients continue to spend more and more money on current and new products that they're coming out with? You accompany that with entirely new companies that are going to be joining Palantir platform. I mean, Palantir's total addressable market just continues to expand, and it still has so much room to go. And you could just kind of get an idea if you read through these little circles here of Palantir's products that they've come out with, and they're just continuing to innovate. Each year, we're seeing new products that are revolutionary. Now, again, keep in mind, if we look at their loss from operations, this is entirely due to that stock-based compensation, which they pay out a tremendous amount, $1.2 million in 2020 and almost $800 million in 2021. But when we get rid of the stock-based comp, their adjusted income from operations is already profitable and highly profitable. Then we get profitability, $473 million of income, and a 31% operating margin. So while stock-based compensation is a real expense, I see it as an investment in this company's long-term prosperity. I mean, they're doing this so that they can retain top-tier talent, get people invested in the mission, invested in the company long term. I think that this is a great strategy that will pay off in the long run, because if they didn't do this, without the stock-based comp, they can't offer a similar package as the bigger companies in the world, and other companies would poach their team members. So I think this stock-based comp, again, while it's a short-term expense, in the long run, this definitely will pay off. This is a company that has an excellent balance sheet. I mean, they're really ready for anything. Total assets $3.2 billion versus liability of under $1 billion. This company literally has no debt, and they did this on purpose to be prepared for the worst of time. I mean, this is a company that literally back in August just bought gold bars as a hedge against a black swan event. They spent $50 million on 100-ounce gold bars back in August. This company is prepared for anything. They're going to thrive in bad time, and this is something that will set them apart from other companies that may not be as well capitalized, and are heavily debt saddled. So as we said, some other highlights from the report, and this is directly from the CEO. Their sales force has historically been very minuscule, and they're aggressively hiring salespeople. We're talking around 200 salespeople, which is only going to help this company continue to grow. You company that with their net dollar retention rate, and you just have a company that's set up for a tremendous growth for years and years to come. Now, during the Q&A session, there were some questions about the share dilution and the stock-based compensation, to which Alex replied that profitability on a GAAP basis is within eyesight. They literally have no debt and $2 billion of cash on their balance sheet. So with those strong internal finances, the company, like we said, is prepared for the worst. They've got that gold investment, which is very interesting. They're internally set up so that they can do well in bad times with that strong balance sheet. Now, here's a quote. I remember hearing this a few weeks ago. The COO, Shyam Sankar, said, "What AWS was to developers last decade, Palantir Foundry really will be to developers this decade." I couldn't open the article here. They're all hidden behind paywalls. But that is quite a quote. I mean, just think about that. If Foundry is anywhere close to what AWS has been, oh my God, the potential here. You're getting in at a bargain price today. If what they're saying is true, I think that this current price of under $11 a share will look like pennies in the future when we look 5-10 years down the line. Karp said he's expecting 100% growth year over year from their commercial segment, and the new cohorts of products, like we showed, are making up more and more of the revenue. Same with the government cohort. And Karp believes the U.S. growth will double again this year. And growth in Europe was slow. It came in at only 41%, which is still an incredible growth rate. And this had a lot to do with the Rona, so he sees a much stronger Europe growth rate coming this year and next. So guys, here are my portfolio holdings by weighting. If you want to see the full portfolio video we did, definitely check that out on the channel from a couple days ago. But Palantir is my 11th biggest position, sitting at a cost basis of $21, so I am down right now. But I still believe in this company, and I've got a couple puts on Palantir, so I probably will end up buying some more shares too. But the growth rate on this company is insane. It's worth buying in for that reason alone, I think, and the fact they seem to be doing something that nobody else is. They've got the software that's just applicable to every industry. It seems that every company out there can really benefit from using it. Company that with their insane growth rate, and the fact that they are profitable today on a non-GAAP basis, all that's standing in the way is that stock-based comp. And the CEO is saying that profitability is within eyesight. So once the company becomes officially profitable, it's going to spike up. So I think that this is a great time to accumulate shares. So let me know what you think of Palantir down in the comments below. Do you own it? Why or why not? If you enjoyed the video or learned something today, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.